Good morning, everyone. Today is June 4th, and I'm here to bring you a special update on gold and the markets as we move forward. We're going to start off with this chart, which is the broad cycle phase analysis I do related to appreciation, depreciation cycle phases. The appreciation cycle phases are drawn in green here. You can see them highlighted in arcs at the bottom. Depreciation cycle phases are drawn in red. In a depreciation cycle phase, what happens is the US dollar, which is the blue line here, typically moves lower after some sort of an excess phase peak has set up. In this particular case, this was the 2001, 2002 peak that carried us through the bottom in 2008, 2009, where we started to see an extended bottom set up, and it wasn't until 2015-16 that the dollar started to gain some traction and move higher. This chart is a couple months old, but it still highlights what's going on. Right now, we are in June 2022. The dollar's up around 104, 105 in this area. And you can see we've moved up into a peaking formation. The stock market, the purple line, has moved all the way up to these levels, actually has moved quite a bit higher. This is the S&P or SPY. And gold, the gold chart here, has actually peaked out just like we saw over here and is trading somewhere over here, kind of where we were. This is 1891 for gold. We're currently at 1853, so very close to this level. What I want to point out is how the US dollar has moved up into a safe haven for the global economy as markets have rolled over recently. This is to be expected. The appreciation phase ended at the end of 2019. We ended up moving into 2020. We had COVID. A whole bunch of stimulus was dumped into the market. Gold has held up well. The dollar became the safe haven. Stock markets and cryptos rallied as a speculative phase took place. Same thing with the housing market. And now we're in the midst of 2022. We've seen the stock market roll over about 20, 25%. Gold is holding up well. The dollar is holding up well and may continue to hold up for another 4 or 5 months before it'll eventually roll into a weaker channel. And what will cause the dollar to collapse is a rollover in the stock market. You can see the stock market rolled over here and really started to collapse in 2000. The dollar peaked and trailed lower as capital moved away from US dollar-based assets and into foreign assets and other assets, including safe havens, gold. Where we're at right now is right over in this area of the stock market. We've seen the initial collapse. We've seen some consolidation. We're waiting for the extended collapse of assets, a true devaluation or revaluation of the market. Call it a reversion, if you will. The dollar has continued to move higher. It's continued to accelerate through this peak. You can see as we got into this peaking area in early 2000, late 1999, you can see how the dollar really skyrocketed higher. That's the same thing that's happened right over here. The dollar skyrocketed much higher as we extended into this late peaking phase in the end of 2000 and throughout most of 2021. What's happening right now is gold, which at this point was basing and bottoming before it really started to take off. Gold is doing the same thing right over here. And this was a 450% increase in the price of gold, actually more. When you look at gold here, moving from $200, $300 an ounce up to $2,000, this is a 950% rally in gold. If we get a 950% rally in gold from this level, this will put gold up into the $18,000, $19,000 range. It'll be an incredible rally in gold. What will it take? It'll take a breakdown of assets. Now, this is where I want to show you this particular chart here that shows you we're already starting to see a breakdown in asset prices take place. This is a custom chart, one of my custom global asset index charts, and you can see we've already broken this channel. It's now starting to move lower. If we start to see an acceleration in the downside of asset prices here, a true unwinding of an asset bubble, then we're going to start to see this whole thing play out just like I explained to you, which is the dollar will peak probably in 60 days or maybe 80, 90 days. And then it'll start to collapse as currency and global traders move away from US-based assets, trying to find value in other assets. My assumption is that it's going to move into gold, and I'll explain to you why right here. My custom gold cycle index chart, the gold colored area here is the price of gold, and my custom index chart shows that we're basing and bottoming. Doesn't go back all the way to 2000, but covers from 2011 all the way to 2023. And you can see that gold has essentially bottomed and revalued through each of these phases. So understand that each of these bottom phases, when we start to see a bottom set up and it starts to rally through these areas, gold revalues. When it bases and bottoms and starts to move higher, gold revalues. When it bases and bottoms and starts to move higher, gold revalues higher. It's now bottoming and basing. I think this is going to be a short-term bottom here, and I think gold is really going to start to break out, targeting the $2,500, $2,600 area initially. Now, let's get to a gold chart, show you what's going on. This is a weekly gold chart showing my analysis, and what I want to do is highlight the rally from this low in 2018 to the current high, which was a price range $899 rally in gold, from a low down here at 12 to a high almost at 2100. We had a beautiful 75% rally. If this rally were to take place from these lows, which I believe is very likely, we're going to be looking at a rally phase setting up over the next couple weeks, seeing gold move up to about 2200, just below 2200, then basing around 2100, possibly just above this level, and then rallying even further up to 25 to 2600 to complete 100% measured move of this rally. If this is a continued rally and it stalls again and tries to move higher, we're going to be looking at another rally phase up to the $3,400 level, which draws similar to what I'm drawing here. So really, I want you to understand that, and this is going out to, if my analysis is correct, is this is going to go hyperbolic. We're going to be looking at maybe 2 years from now, little under 2 years roughly, we're going to be in this $3,600 area from where gold is trading right now. That would be a roughly 100% measured move in gold, or not measured move, but 100% rally in gold from these current levels. And what's going to do this, understand, ladies and gentlemen, is the Fed is trying to stop inflation. In order to do that, they're going to have to raise rates. They're going to have to devalue the economy, break the consumer speculative cycle, and that's going to be a bubble unwinding that's going to take place in the markets. And when I say that, we're really looking at a bubble unwinding that is similar to, find it here, similar to what's happening here in Bitcoin. We're seeing an unwinding of cycle phases, and I really believe that Bitcoin is going to collapse somewhere between another 40 and 60% down into this 7,000-8,000 range before it attempts to find support. And that's going to essentially be an unwinding of a speculative bubble that's going to catch everybody off guard. And I don't believe there's any way to avoid this right now, as the Fed must break inflation, it must break these cycles, and it's going to break a lot of price cycles in the same process, sending gold higher. What's going to send gold higher? If the Fed breaks these speculative bubble phases, we really start to see an unwinding of capital. Capital doesn't vanish from the planet. What it does is it seeks out safe havens, and the safe haven is going to end up being gold and silver. That's why this is basing and bottoming in this level here, likely to continue to extend higher, and silver will likely rally from the 23 to $22 range, up into the $60, $70 range very, very quickly over the next 2 or 3 years as this takes place. So there you go. The update is stay cautious. We are in an unprecedented cycle phase that's going to disrupt current assets and disrupt your current thinking of what you think is a safe haven. Cryptos and stocks and other asset classes are not going to continue to stay safe havens. I expect them to base and bottom somewhere around 2025, 26, or 27. Not now. It's too early for a base and a bottom. We have a lot of unwinding left to go, and the traditional safe havens of gold and silver and other precious metals are going to become very, very exciting over the next 6 to 7 months. Just wait for it.